This is the 5-minute time frame of GBP/USD. If we look at the indicator table for this time frame, you can see it says that the market is ranging. Looking at the chart, you can see that the market is indeed ranging just as indicated by the tool. Here's another scenario. The indicator shows that on the 1-hour time frame of GBP/USD, the market is also ranging, and looking at the price action, you can see that it was indeed moving sideways. So if you were using this indicator to trade, not only would it be helpful in identifying the trend of the market, but it would also tell you when to stay out of the market. I'm going to break down exactly what this indicator is, the best settings to use, and I'll also share a highly accurate pullback strategy that you can use with this indicator to maximize your profitability. So let's start. So I'm in TradingView. I'll be using the 5-minute time frame of GBP/USD. First of all, to add the indicator, click on Indicators. Search for Smooth Gaussian Trend Filter. Select the one created by Algo Alpha. This is how this indicator looks on the trading chart. This is the Smooth Gaussian Trend Filter, a trend-following indicator that combines Gaussian filtering with linear regression, smoothing to enhance trend visibility while simultaneously reducing noise. In simple terms, it helps traders focus on the actual trend of the market while filtering out unnecessary price fluctuations. Before we go over buy or sell trade examples, let's understand the components of this indicator quickly. To do that, we need to access its settings.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
First, we want to activate the mid-trend signals and the trailing bands, which are disabled by default. Next, change the table size to large or medium according to your preference for better visibility. And then click OK. The first major component of this indicator is the Gaussian band, also known as the trend ribbon, which changes color between green for a bullish trend and red for a bearish trend. During transitions between bullish and bearish trends, the indicator prints up and down arrows to mark where the trend shift occurred. For example, if the market transitions from bearish to bullish, you'll see a green upward arrow, and if it transitions from bullish to bearish, you'll see a red downward arrow. These arrows don't act as entry signals, but are useful for spotting trend shifts at a glance. Within active trend in the market, the indicator also prints mid-trend signals like these. These appear when the price pulls back to touch the Gaussian band. A green signal suggests a buy opportunity within an uptrend, while a red signal suggests a sell opportunity within a downtrend. These signals are particularly useful for trend continuation trades, as they highlight pullbacks where the price is likely to resume in the direction of the prevailing trend. Now, if you take a closer look at the Gaussian band, you'll notice its brightness also varies over time. This is due to a feature called volume intensity highlighting, which adjusts the brightness of the trend ribbon based on market activity and volume. When the market activity is strong, the colors are brighter and more vivid. When volume is low, the colors become darker, signaling weaker market participation. In a bullish trend, traders may want to only take trades when the band is bright green, indicating strong buying pressure. Similarly, in a bearish trend, traders may want to only enter sell positions when the band is bright red, indicating strong selling pressure. Another key component of this indicator is the multi-timeframe signals table, which displays trend signals for up to 5 different time frames as either bullish or bearish. You can actually adjust these time frames in the settings. This table helps traders align their trades across multiple time frames, ensuring stronger confirmation before placing a trade. If the market is ranging, the table will display ranging, which helps you avoid trading in choppy conditions where price action is unpredictable. Now, before we go through the trading strategy using this indicator, let's move on to the settings. You can open the settings of this indicator from here. The Gaussian length controls how much price data is used for the Gaussian smoothing process. A higher length makes the trend line smoother, but may introduce more lag, while a lower value makes it more reactive to price fluctuations. For this strategy, I'm setting this to 150. The smoothing length, which refines the trend further, is set to 30. The flatten multiplier, which helps reduce short-term fluctuations and keep the Gaussian band steady, remains unchanged. Now for the time frames, I'm setting 5-minute, 15-minute, 30-minute, 1-hour, and 4-hour time frames to ensure alignment. Make sure to follow these settings for best results. After we have done that, we will also disable volume intensity highlighting and enable the trailing bands for a cleaner setup. After finalizing these settings, click OK. Now, let's see how we can use the pullback strategy using this indicator. The first condition for a buy trade is ensuring that the market trend is bullish on at least 4 out of 5 time frames, just like it is here in this example. Here, the Gaussian band should also be green, confirming an uptrend. The second condition is to wait for a pullback. This happens when the price comes back and touches the Gaussian band without closing below it. Its wick can enter into the band, open inside of it, or even close inside it, but it must not close below the band. In this case, we got this price candle that made a pullback into the band, giving us a valid pullback entry. Now, during the pullback, we need to look for a candlestick pattern where one red candle is followed by an engulfing green candle. An engulfing candle is simply a candle that is larger than the previous candle. Here, we see that this green candle is bigger than the previous red candle, confirming our setup. So we enter a buy position here. We can place our stop loss below the most recent swing low. Now, let's let the trade run and see if the market moved in our favored direction. And as you can see, it was profitable. So let's quickly go through another one. Here, we can see the market is bullish on all the time frames, which is an even stronger signal. Next, we can see the Gaussian band is also green, confirming the uptrend. Now we wait for a pullback. Price touches the Gaussian band, but doesn't close below it. Here, we can see that this candle meets the criteria, making it a valid pullback entry. Next, we look for the candlestick pattern, a red candle followed by a larger green engulfing candle. And here it is. This confirms our setup. So we enter a buy trade here. After some time, as you can see, the market moved in our favored direction. And since this was a stronger buy signal because the market was bullish in all the time frames, we could have even gotten a 5-to-1 risk to reward ratio, which is amazing. For a sell position, simply flip the conditions. The market must be bearish on at least 4 out of 5 time frames. As we can see, the market is bearish on all 5 time frames, which is a very strong signal. Secondly, we can see that the band is red in color. And then the price must pull back to the Gaussian band without closing above it, just like it did here. And then we look for a green candle followed by an engulfing red candle, just like we have over here. It's exactly opposite to the rules for a buy trade. So now we can enter a sell position. For a sell position, you can place the stop loss above the most recent swing high. After that, you can target a specific risk to reward ratio, which is recommended. Or if you are an experienced trader, you can go for the trailing stop loss and take profit method. As you can see, we could have gotten a mind-blowing risk to reward ratio of 9-to-1 over here. If you want to check it out, it's available on TradingView. That's it for this video. If you found value, don't forget to leave a like and consider subscribing for more. Thanks for watching, and I'll see you guys in the next video.